Thank you, sir. Thank you for the question. Thank you to the Dawn Media Group for hosting this wonderful conference. I'm really enjoying it. Munir Kamal Sahab, you have many questions rolled into that.
Yeah, I know.
And so I'll try and break it down. I think the first broad question around that is, what role can the banking sector play? And should we be held accountable for it? And then the second one is more around Bank Alfalah's or journey on the environment side. So I'll sort of broadly cover those 2 points. If there's anything that I've missed, you can surely ask. So clearly, banks can be an important force for good and force for change. Certainly at Bank Alfalah, we believe that. We are an important cog in the wheel, and in this desire to improve the environment and for this climate change, can we be held solely accountable? Of course not. There's going to be a lot of stakeholders, so we're an important cog in the wheel. We are very socially conscious, certainly at Bank Alfalah, about our social responsibility. We are responsible for safeguarding everyone's deposits. So we have to ensure that the financial system remains sound. In the same way, we have to be caring towards our people and the communities that we live in. So we've been trying to obviously play a significant part towards that end. However, there's got to be a partnership model that has to come in place. So you have to have government policy that supports it. We have the example of California. So that California is the leader in climate action in the US, and there's a lot of policy that supports, government policy that supports that whole ecosystem. So that whole ecosystem has to work together to make, to make positive inroads towards climate action. So yes, we can be held accountable if there is certain policy targets that are given to us, but obviously we cannot be doing it on our own. And I'll give you an example of our journey that we took. So we at Bank Alfalah are very conscious about our responsibilities. You mentioned about the floods affecting a significant portion of the economy. Some say 30% of Pakistan was affected. We were the largest corporate donor, Bank Alfalah. We made a $10 million contribution towards the flood affectees and the rehab there. We invested a lot of money. We impacted about 1.1 million individuals in that process, and we were measuring that and getting it audited by a reputable auditor to make sure that we are actually, it's backed up, that information. We invested a lot in getting people to, sustainable housing. We were very conscious about the environment. We are on our essentially journey to become a green bank. That's really our goal. So where did this journey start for us? I have to give credit to IFC, I have to say, because IFC came in as an investor in Bank Alfalah back in 2014, and that was one of their prerequisites that we have to set up an environment and social management system. So we put that in place in 2014. We were the first ones to do it. So that was about 10 years ago. And it was an interesting journey because initially when we would ask our clients, well, do you have an environment? We would ask them all these questions about environment, and they'd be completely lost and come to us and say, well, why are you asking us these questions to us? No other bank is asking us these questions. So it made us uncompetitive in many ways. So we had to cross that bridge. So that was an interesting journey. We don't face the same issues anymore, but that was 10 years ago. Second most frequent question that we used to face at the time was our clients coming in and saying, where exactly do we go to get this environment certification? So there weren't any, it wasn't very clear, obvious which government agency they'd have to go to get those certifications. So again, that was part of our journey. So this brings home the point that partnerships are important, policy action is important by the regulators and by government to support the ecosystem. We can't do it alone. Now, there are systems and policies and procedures now in place. The central bank has been active, so now all the other banks are also have adopted a lot of these practices, so that's good. So that, that's been really, really important part of our journey. The other thing that we're thinking about, as I said, we want to become a green bank, and that really entails, three broad focus areas for us. Number one, we are focusing on, reducing our own impact on the environment. So how can we, we have branches and real estate all over the country. How do we make sure that we can put in sustainability measures in place? And now we've started to do that. That's very, very important. How do we dispose of our waste? That's a big, issue that we need to consider. Other than that, we are allocating capital towards, more and more capital towards, green initiatives. We've invested about, at least 30 billion or so in green and idle projects. That's been good. And then the third and most important aspect is how do we introduce more and more products and services which are green. So that really is, our, some of the key focus areas for us. So it's been an interesting journey for us. It's something that we believe in. We feel in summary that we at Bank Alfalah can be a force for good in this area. We care about our communities, and we want to continue to pursue our ambition of becoming a green bank.
From Zeeshan, but let me tell you what I was given and what the question, but you can speak on whatever you feel like. The question for you, Zeeshan, is the new blended climate finance facility launched with the help of UK's FCDO. The recently announced UK-Pakistan country development partnership strategy is focused on addressing critical structural issues, population dynamics, climate vulnerability, gender equality, and macroeconomic stability. However, there is currently limited understanding of Pakistan's climate finance gaps, where this finance is most needed, and how Pakistan can mobilize the US $348 billion. And this number keeps coming back again and again. I'm sure whoever raised it has some really good reasons for getting needed by 2030. Can you shed light on the role of public and private sector climate finance in Pakistan, and how development partners like IFC can effectively collaborate with the government of Pakistan and the private sector to pull in the same direction and realize Pakistan's climate finance objectives?
Thank you, Kamal Saab. It's a pleasure to be here, and I want to begin by thanking Dawn Group and the organizers for giving us the opportunity to be part of this discussion and for organizing this very topical get-together. Thank you also for your kind words. So as IFC, as part of the World Bank Group, trying to further the climate agenda is a global priority for us, and in countries like Pakistan, which are amongst the most vulnerable when it comes to the risks of climate change, it is arguably one of the most important areas of engagement. There's lots of things I can share in terms of the work we're doing and what development partners are and should be doing more of. But I thought I'd bucket my response in three areas. So your overarching query was, how can development partners help bring the public and private sector side? So I bucketed that response in three topics. To our mind, there's an overarching role in helping develop the ecosystem around climate finance. Within that, there is a role for policy and regulation, and you talked about some of those things. We were involved in the green banking guidelines that the State Bank issued in 2017, the ESRM engagement, which came later, which has Bank Alfalah and others involved. Day before yesterday, the State Bank issued a draft of the green taxonomy for public consultation, and I hope within the next month or two, once that gets finalized, that's an important piece of regulatory work. The SCCP, as you also mentioned in your remarks, has put out guidelines on disclosures, and we're engaged with them on a number of those topics. Beyond that, there is a lot of scope for policy engagement when it comes to areas like carbon credits. There is some good work happening In the VCM space, a lot more needs to happen in that space. A lot more needs to happen in the compliance market. There is good policies out there on green buildings, but implementation, particularly at the provincial level, is an issue. So a lot of work needs to happen on the green buildings codes. And then on the whole circular economy agenda, which is a major issue for a country like Pakistan, that's producing over 50 million tons of waste a year, and almost none of it is being recycled. So I think one big area of engagement is around policy, and that is about sort of using the learnings and the knowledge we have from our engagements in different countries who've been on similar journeys, faced similar challenges, to bring in policies that are enabling. The second part of it is capacity building. And again, I think Aasim also touched upon it. While oftentimes there is desire, there is a genuine shortage of people in Pakistan that understand these things, from really basic things into ENS consultants and green building certification folks. So there's a lot of work that needs to happen on capacity building, training the trainers, training regulators, training private sector, both on the financial sector side and the real sector side. So for me, that sort of engagement, which no one IFI can do, I think requires all of us, and there's a lot of good work happening between several of the active entities here. Jo is also here. I'm sure she'll talk about what the UK is doing. All of us and more is needed to work on the ecosystem, which is sort of step one. The second part of it is around really working with the financial sector. It is our view that no IFI or any group of IFIs can really help meet Pakistan's funding needs on a standalone basis. We can help instigate, we can help encourage. Ultimately, the financing needs for climate in Pakistan will need to be met by the financial institutions in Pakistan. And that's core to our strategy. So the biggest push we have in the climate space is in the financial sector. And again, Aasim mentioned about some of the work that's happening with Alfalah, which is one of the most progressive banks in this space. There's others also doing really good work, HBL and others. And again, there is an element of that which is around capacity building, systems, knowledge sharing, and then there's an element of that around product development. And that is everything from green loans, green bonds, sustainability-linked loans. I'm actually happy to share that very soon we'll be announcing what will be Pakistan's first sustainability-linked loan. A sustainability-linked loan is a loan where the pricing on your loan is linked to the borrower meeting certain KPIs under SDGs they pick. In this particular case, water is one of the SDGs that they pick, gender is the other. So for us, this is the kind of product that should be prevalent, and everybody should be doing things like that. There are then things like transition bonds and transition loans. So energy transition is a big area in Pakistan. Transition loans and transition bonds are products that fund that transition from a carbon-heavy source of energy to more renewable sources of energy. There are then areas around carbon markets, financing, and various products around it. And the other area in terms of our engagement with the banks is around risk sharing. So oftentimes, while there is interest, while there is a need, risk appetite is an issue for multiple reasons within the banking sector. So one of the things that us and other IFIs are also considering doing is sharing the risk. So, Bank A lends $100 to a company to do something around climate. We take 50% of that. So if that goes wrong, we will take half of that risk, and that encourages banks to get into some of these sectors which are not as traditionally bankable. So that would be the second bucket of what we think is IFIs can do, which is really helping develop the banking sector, the financial intermediary sector in Pakistan. And then the last bit of it is around really developing bankable opportunities. And I think one of the earlier speakers also talked about it. There aren't enough developed frameworks around bankable opportunities. And a big part of it is around public-private partnerships. And again, P3A is an excellent addition, but also the framework of PPPs in Pakistan is that a lot of PPPs sit within the provincial remit, in which of course is very well known to Khalid and others. So we need to build capacity at the provincial level, at the federal level, to try and build in bankable opportunities. And so much of what we talk about in climate has a public and private element, whether that's energy, whether that's water, whether that's solid waste management, whether that's agri. pretty much all of those areas have an element of public and private intervention. So finding ways to bringing that together is important. The other piece that we're doing on the bankability side is funding some of these things, which is providing long-term financing, which is needed to make a lot of these engagements viable. We have the risk appetite to do these things, and we encourage others to come alongside us. A key sort of ingredient to this mix is blended finance, and that's what you also mentioned in your initial remarks. And we're grateful to our partners in the UK for the SIFPAC facility that IFC has signed with the UK government last year. It's the largest single country blended finance facility that IFC has ever signed globally, and correct me if I'm wrong, but it's also the largest one that the UK has ever signed. That's right, isn't it?
I think so.
Let's claim that it is. But certainly for IFC, it's the largest one. And it's essentially a climate-focused blended finance facility for the private sector. And it's designed to particularly try and crowd in private investment for adaptation-related areas, which I know over the course of the last 2 days has been rightly so a big topic here. We have also recently engaged with the Green Climate Fund for a private sector-focused water facility in Pakistan. So Pakistan is one of the 7 countries that will be part of this global facility, where again, it's a form of blended finance. And this is important, as I think one of the earlier speakers were also saying, that often financing is not available. When it is available, it's not on terms that makes the ultimate investment viable. So if we can make that, at least for this initial period, viable by either reducing the risk or the cost of that investment, I think they'll encourage much greater private investment. So those are the 3 big buckets. There's a lot more to be done, and again, it needs everybody, both on the public, private, and the development side, to work together on that. I'll stop here.
Thank you very much, Zeeshan. Our next speaker is Moir, Development Director, British High Commission, Islamabad. By the way, this company that I was talking about, Infrazam in Pakistan, which did the first gender bond and now in the process of doing a green bond, this is owned by Infraco Asia and then Fitch. And UK government is behind this effort. So it's an incredibly...
Also Karan
Daz. Karan Daz is a great institution. I mean, I've been dealing with them, and it's an incredible institution. Thank you very much for that, because this is an incredibly fresh institution, and I'm just found myself to be privileged to be on the board. Each time there is a proposal like that. So I have a question for you, and the question is, a recent report by the FCDO highlights that Pakistan highlights immense cost of inaction. That's nothing new for us, actually. What have been the challenges that need to be addressed urgently and opportunities that require investing? How can the private sector and government work together to make the economy more resilient? It's a very broad-based, but it's up to you. How do you want to answer this?
Thank you. I'll have a go. And thanks to Dawn Media Group for this wonderful gathering over the last couple of days. Very, very informative. So, the cost of inaction. Why do we need to know about the cost of inaction? It might sound obvious, but the truth is that unless you can see which adaptation, investment, or activity to prioritize, there is so much to do, you don't know where to start. So the reason we worked with the Boston Consulting Group to produce this cost of inaction report, and it's on the web, you can find it, it's called Bridging Pakistan's Adaptation Financing Gap, catchy title. The reason we invested in this report is because you need to cost up that risk of not adapting to climate change. You have to be able to say, if we don't invest in better seed varieties that are resistant to drought, if we don't provide the right sheds for our livestock, this is how much it's going to cost. Because when you know the cost, you can start prioritizing what to do first. And you can also start to structure investments. That's really, really important. If we're going to engage the private sector, so many people have said already, you need to have bankable deals, and that means proper structuring, and people like Zeeshan and Munir and others will know far better than me how to do that. So this report has some pretty stark figures in it. So it takes a number of scenarios out to 2050. It looks at potential economic losses, social losses, environmental losses, and it looks at the different kinds of climate events that you might have. So extreme heat, drought, flooding, sea level rise. We tried to do glacial lake outbursts as well. We couldn't get the data. So using AI and a huge data model, the report predicts some quite scary things. So for instance, the economic losses to 2050 under the worst case scenario are $1.2 trillion. Trillion dollars, huge, right? In terms of rice and cotton crop yields, it's also quite frightening. These losses to yields could be as much as 50% by 2050 if we do nothing. Swathes of land at the moment which are used for livestock, potentially because of extreme heat, just wouldn't be viable for those industries into the future. And then, of course, as we saw with the 2022 floods, there will be repeated displacements of people owing to flooding, but also owing to drought. So without going into too much of the doom and gloom, there's a pretty compelling set of arguments and costed set of arguments for investing in adaptation. The good news is that when you know these risks, you can start to look at prioritizing investments and projects. And actually there are things that we can do now, quite simple things that we can invest in, which will shore up really important economic sectors here in Pakistan into the future, notably agriculture, textiles, but also, you know, other underpinning sectors like water. The reason we wanted to start investing with IFC in this blended finance facility is to try and crowd in more private sector investment to some of these adaptation challenges. So actually Pakistan, many of you will know, doesn't do brilliantly in terms of climate finance, and that's for a whole range of reasons, not least actually because the international climate finance funds are quite slow and cumbersome to work with. That's another problem. But even with the $4 billion worth of climate finance that Pakistan receives every year, only a tiny percentage of that is from the domestic private sector. It's about 5%. So most of that climate finance coming in is public finance. And yes, there is some international private finance, but just a tiny amount of domestic finance. That's a huge untapped opportunity. So what we're hoping to do with IFC, and actually already started, is to use our development capital, so kind of precious grant money, to help de-risk investments, particularly in adaptation and resilience. So it's a £70 million offer from us. What's that? About $80 million, sitting with IFC money, blending with IFC money, and leveraging, we hope, up to 5 times private investment. The other aspect that's been talked about is project preparation. So again, we come at this from a number of different angles. Kate's already mentioned the CFA, which is a brilliant program DAI running in partnership with us here. But also alongside the blended finance facility there that IFC is running, there's a project preparation facility. So that's £20 million, what's that, about $25 million to help create these bankable projects. So I hope that gives you a little bit of an overview of how we as a development partner can start to work with others in the sector and with private sector partners to crowd in more finance. I'll just finish with a couple of words about government, because I can see my good friend Nadia from the Planning Commission, who is brilliant on all of these issues sitting here. I think one of the most important things government can do, and this is both federal and provincial, is to embed really good risk assessment tools into planning processes. The CPMA process, the Climate Public Investment Management Assessment process, is embedding at the federal level. We need similar tools at the level of provincial government, because again, that helps government know which investment to prioritise first, which is going to have the biggest impact in terms of adaptation and resilience, the biggest bang for the buck. And it also helps to think through which investments should be PPP, perhaps, which may be fully commercially viable, and which should be done by public investment. And I know that government is working really hard on this at the moment with the IMF's Resilience Sustainability Fund potentially being an option for Pakistan. That will also drive a lot of really good structured activity in that area to get the planning and assessment processes into good shape. The business enabling environment has also been mentioned, and I think I'll just finish by saying, you know, this is also an absolutely critical area. We know that Pakistan is not always the easiest business environment to work in. You know, fantastic businesses here in the audience, all finding opportunities. But again, the onus is on government to really try and smooth some of those regulatory pathways, correct some of the sectoral imbalances that we currently see, and actually, you know, take a step back often to make it easier for business to invest here. I'll stop there. Thank you.
Thank you very much. That was very, very interesting. Next speaker is Sobiah Becker. She serves as an advisor for the Pakistan-German Climate Energy Partnership at the Deutsche. It's German, I can't pronounce it. You can let us know. So welcome, and the question, yeah, I have a question for you. And the question for you is, climate-related risk can be categorized into two types, transitional and physical risk. With the EU's Green New Deal coming in, legislation such as the carbon border tax and CSDDD will increase accountability in the supplier countries. How can Pakistani companies, especially exporters, prepare to meet the stringent environment requirements under the EU's GSP Plus program?
Thank you very much for that warm welcome, and a very good afternoon to all present in the audience. It's a pleasure to be here. That's a great question, and I was thinking about it, and I felt that there were slight undertones of, oh, this is something that we have to do. You know, we're being forced to do it, and I think it's important to unpack that a little bit, because it's time to reset this narrative, shifting this narrative away from more of a compliance-driven adaptation to thinking of it more in terms of opportunity. So, you know, it's really an opportunity-driven transformation that the introduction of these global standards are actually encouraging. So it's very critical that we move away from this idea that sustainability is something that's being forced upon us, and instead focus on the fact that sustainable, climate-resilient industries opens up new markets, it fosters innovation, and it also builds resilience against both market as well as environmental shifts that we have. You asked Kamalsab about the physical risk as well as the transition risk. So I think the physical risks are very well understood. Pakistan is a highly climate vulnerable country. But the point that I'd like to make here is that we cannot effectively address the physical risk in this country till we have a cohesive and effective transition framework. So you could have all of the policies in the world, but if these policies are not regulated, they're not informed, they're not monitored, then we're not going to get very far. A classic example of that is industrial stack emissions, where you do have policies, you have the EPAs in the different provinces, but the enforcement is perhaps not so complete. So brick kilns is a classic example, and the smog that we have today, which is unfortunately shortening human lives, it is impacting the development of children. You have these problems that exist. The Pak-German Climate and Energy Partnership represents all of Germany's bilateral investments in this country, and we have a very significant portfolio in climate and energy in this country. So we have a whole of society as well as a whole of government approach to addressing climate change, And we work with government, obviously at the national and the subnational level, but we also work closely with industry. We work with academia, research, and think tanks and civil society organizations to develop a very cohesive and coordinated approach to addressing or achieving climate resilience. I can say with a high degree of confidence that floods, heat waves, shifting monsoon patterns carry far-reaching consequences in terms of energy and resource availability, so that impacts your supply chain, but also in terms of health and safety considerations of your workforce. So these are not unknown. And there are a number of things that the Pak-German Climate and Energy Partnership is doing in the country to address these. The first, and I believe a very solid contribution to this, is developing climate risk profiles. And we've done that for some of the key export-related sectors in this country. And these climate risk profiles point to where investment should go in terms of future-proofing investment in the country, but also in terms of helping the redirection of investments to sectors where it makes then sense to do it. So we have climate risk profiles for agriculture, textiles, as well as some manufacturing sectors to help Pakistani businesses understand and then also craft their response to the disruptions that extreme weather brings about. We have also established a climate risk information portal, and this is, you will find all sorts of information in the public domain. They are there for you to access and drive evidence-based decision-making in the country. In addition to climate risk profiles, what the upcoming global regulations like the carbon border adjustment mechanisms, the corporate sustainability due diligence directive, as well as you mentioned the GSP plus Kamal Sab, the starting point for reducing or addressing the carbon footprint is always going to be energy. You have to address energy in the equation. And in panel one, we had the colleague from Jazz who mentioned that specifically, and Shahzain Munir also landed some very good points related to energy. But decarbonizing the energy supply is key. It's going to be key for CBAM. And this is where we are working on decarbonizing the grid, because for CBAM, your products are going to need clean, green energy to the extent possible. We are working on digitalizing grids, so you have smarter grids that are more efficient. And then we're also looking at how we can ramp up all of these actions very effectively and ensure that it's not just at the national level, but also at the subnational level. We are working on getting access to carbon finance. And I'd just like to say here that a very, very recent PwC report, hot off the press, they have shown that industries that have made investments in any sort of climate resilient infrastructure or processes, they've actually reaped 6 times the reward of that investment. So it makes a lot of sense. Nevertheless, to facilitate the transition of industry to a cleaner, greener growth trajectory, we're developing capacities to help institutions access carbon finance. And we're also looking at how we can implement or operationalize green taxonomies. Because we spoke about GSP+, that brings to mind textiles, which is one of the leading export-related sectors in this country. We are working with textiles on developing circular economy approaches. We are working with them to address resource efficiency so that you have efficient products that go not just from cradle to factory gate, but beyond as well, and allowing you to maintain market and export competitiveness and ease access to markets abroad. And finally, with regards to the CSDDD, we have established the Responsible Business Help Desk in Pakistan, which helps industries comply, learn about these directives, and comply with them. So when we think about the carbon footprint, we're looking at the entire spectrum. So it's not just Scope 1 and Scope 2 emissions, but we're also looking to strengthen the supply chain in terms of their carbon footprints, because eventually a company that can control Scope 1 and Scope 2, that's pretty much within their factory boundaries. But beyond that, their suppliers also need to be have a smaller carbon footprint. So this is a small snapshot of all of the things that we're doing to ensure Pakistan's continued green growth. And we look forward to aligning very closely with the new Udaan Pakistan program as well as with the the domestic financial ecosystem on implementing specific initiatives. Thank you very much.
Thank you very much. Our last panelist here is Khalid Mehmood Sheikh Saab. He's the Chief Executive Officer, Sindh People's Housing for Flood Affected. And the question for you, Khalid Saab, is, and it's a must, thank you very much for all you're doing. It's a very critical thing that you're involved with. What have been the challenges that need to be addressed urgently and opportunities that require investing in from the private sector?
Thank you very much, Munir Saab, and taking advantage of your using Urdu verse, I will start with the Urdu verse of Allama Iqbal with slight modifications. That वजूद प्राइवेट पार्टनर से है तस्वीर कायनात में रंग, इसी के साथ से है ज़िंदगी का सोज़े दुरू. Whatever beauty you see around is because of the private sector. Our job, I come from public sector, but our job is to actually allow you to take over most of the activities which we are unable to do. Rather, I will say that we don't do anything. The public sector is good or may not be good, but they are responsible for making policies and vision, bringing vision. And we have the ability to think larger, because I'm CEO of Sindh People's Housing for Flood Affectees, and our mandate is to actually reconstruct 2.1 million houses. And so far we have put around 900,000 houses under construction, and 50,000 houses are being constructed every month. We are not doing it. The private beneficiaries are doing it. The banks are taking helping us, and they are opening their accounts. So everything is being done by the private sector. So our job is to do actually to create vision and to bring policy which is private sector inducive. The history of public-private partnership dates back some 2006 in Pakistan, when federal government thought about it, and in 2008, government of Sindh started public-private partnership. And somehow we did good start, because we came up with the policy, with the vision, and the ambition to do PPPs, and so many good projects were done in Sindh. But unfortunately, this could not be replicated in other provinces, including the federal government. I would just start down few points which, because of the paucity of time. Number one is the vision. There should be a vision of federal government and provincial government that what they intend to achieve. I feel that this vision is lacking somewhere. I remember in 2012, Manmohan Singh created a vision of road PPPs in India, and they said we need 100 kilometers a day in public-private partnerships. And then all the infrastructure authorities in India started working towards that. So one thing is that we should create a vision. When there is a vision, then the policy will be there. And the vision should be followed by the policy, and all the other obstacles which actually hamper the private sector's movement will be removed. For example, there are so many departments which are involved in the doing of public-private partnerships. So lack of coordination often exhausts private sector. So this should be the first thing. Second thing is governance issues. I think the new model of public governance is changed now. The old bureaucracy cannot function as efficiently as we are facing the challenges of 21st century. They need to be trained and abreast of the modern educations so that they are compatible with the private sectors. Third thing is we should be sincere in inviting private sectors to take over the things. The issue is public sector does not create anything. Everything is created by the private sector. But when we talk about the public-private partnerships, we are trying to create a long-term relationship where the private sector brings in investment along with the banks. And since this is a long-term relationship, so there are so many risks which need to be addressed. If that is structured properly, then we call it a good project. Often we create good projects which are very, very bankable. Bank is there, private partner is there, but some obstacles, I would not mention, some obstacles from the public sector just dashes down everything, be it PIA, be it water projects, which we have been doing for so many times. So, if there is a vision, the public sector will come up with the policy, and then the vistas will be up. That is that are the challenges. Opportunities are quite often, everybody knows about them, that the government doesn't have enough resources. So private finance, if it comes into the public sector domain, it will help create the infrastructure which is already needed. Efficiency is one of the elements which we seek in the private sector's participation. When there are banks involved, there are consultants involved, there is a private sector there, so there is broader area of transparency. So I think there is no denying fact that PPPs have been seen in Pakistan happening for some times, should be given more importance. Thank you very much. I stop here.
Thank you very much. This has been a fascinating 2 sessions. Great panelists. Thank you very much, all of you, the first panel and the second panel. It's appropriate to end this wonderful program by inviting an eminent speaker, Amir Paracha. He is Chairman and Chief Executive Officer of Unilever in Pakistan.
Assalamu alaikum, everyone. It's been quite an interesting last 2 hours. And I've been given the honor for delivering the closing remarks, which is the toughest one, to capture all the enlightening conversation we had over the last 2 hours. But before I start, I would like to start with a disclaimer that I'm not a climate expert, and there's a lot of experts sitting here on the financing side, on the blending financing side, on how to really mitigate the environmental impact in Pakistan. I'm more a practitioner, and I'll actually give my closing remarks more from the lens as a practitioner, and I'll try to basically make things more real by sharing some examples and also what's actually going around. I remember the first time I heard about this climate change, and that is back in 2009. We had a global CEO by the name of Alan Job, and he came from Nestle to Unilever, and he set at that time the vision that we will double the business by halving the environmental footprint. Now, that time it was quite a weird thing that you are trying to connect both the business growth with climate. And that was sometime around 17, 18 years back, when the climate was more like a poster child. It was something distant threat. It was not a living reality. And fast forward 1.5 decades now, and we see that everyone is talking about climate because everyone is impacted. And primarily because what's going around the world, it's not only Pakistan, what has happened in California, a very developed country, it's not going to be sparing any one of us, be it D&E markets or be it developed markets. So that's the disclaimer I would like to start off. I can't stop being conscious of what's happening around us. And what we have been seeing, that the world is actually getting a lot more polarized than it has been in the past about the challenge climate. And there is a degree of apocalyptic horror to this climate events, yet the sense of disengagement and the lack of speed to do more feels as a threat. And it seems like that we are centuries away from the future, which is not the reality. In the fight, flight, or freeze response that the world takes to climate change, our choice is quite limited. We can only fight, and that too with actions, at least until we find a way to the Mars. And the possibility is that we need to basically get together for the collective actions. And this said, leaning completely one way or the other, doing work or doing business without impact, or doing impact without business won't cut it. And we have to basically do it side by side. There's one lesson that we must acknowledge about sustainability, which sits at the heart of how private sector can support and accelerate climate positive change. And the lesson is that over the last 2 decades, we have learned that the true impact happens when our environmental and the social goals align with the genuine business stroke commercial goals. In other words, when sustainability pays, business sticks with it. Otherwise, business moves on. And that's a reality we have been saying lately. The success of true action is dependent on the power of well-built business case. And we have seen the current panel who have been talking about the bankable projects. It ensures that environmental and social institutes don't just stay at the periphery. They drive innovation and long-term growth. And what we address needs to be a universal challenge or a shared one. And the solution must not step or be impractical, which includes viability of not just commercial, but impact. Let's start with climate, considering the conference has been convened around it, and it's an issue which is affecting each one of us. And it's the biggest threat in Pakistan. When we started our journey to our net zero ambition, we focused on getting our own house in order. And I'm referring towards Unilever now. How did we mitigate our emissions? And the company has been in Pakistan since independence, and we have benefited out of this country, but it's time to start paying back. And this is the time that it was back in 2019, 2020, we formed a strategic partnership with a Standard Chartered Bank to leverage state banks of Pakistan financing of the Green Initiative. We collaborated with solar providers like Rion Energy and K Solar and replaced much of our fossil-based energy with a renewable energy. And today, in the last 10 years, our energy mix is 91% renewable. And if I were to compare our carbon emissions since 2015 baseline, we have reduced our carbon emissions by 93%. So this is very much doable, but it was backed by a clear commercial case. Otherwise, I don't think so as a private sector we would have been able to go that far. So therefore, it's very important for any private sector to really have a very compelling business case before they start investing into any sustainable project. The second bit is, I can say with confidence, because Unilever not just globally, but also in Pakistan, this model has been scaled. And the other one, which has been the talk of the town, is plastics, which of course, we take the responsibility because as a producer, and can often be a point of criticism for business like ours. And with due reason, we wanted to chase the goal that we create impact and not only headlines. How? Collect more than we sell. And that's a target we set for ourselves back in 2015, that we want to actually collect more plastic wastage in the country than we actually produce. I'm happy to share that last year, a year before the schedule, we actually collect more plastic than we sell in this country. And that is very doable. But again, it was backed by a clear commercial business case. We basically formed partnerships with some startups. We formed some partnerships with some private vendors that they do the collection on our behalf, and they'll give a second life to the plastic. And the second life to the plastic was given by actually converting the same plastic into outdoor furniture and benches, which are going to be staying for years to come. We also basically worked with some local vendors how we actually convert our rigid shampoo bottles into recycled resins that we can actually reuse into our product. And it's not the story of Unilever. I'm aware that many other corporate companies today in Pakistan have taken such steps, particularly in case of plastics. There are companies who have taken initiative to actually collect the plastic and convert it into roads. In a very same city, we are actually here. So we have seen that how private sector is actually trying to solve this problem. But again, this problem has to be solved at the back of the financial case. For example, our R&D has been working that how we actually come up with a plastic which is sustainable and it does not come out at any additional cost, because we cannot go back and load this cost to a consumer and ask them for more price. They want a sustainable product but at a cheaper price. And therefore, it's important that we get our R&D into action. It's important that we get into partnership that comes at no cost. And that's the only way forward. I want to zoom in now into a critical component that ties all these initiatives together, and that's financing and bankability. Resourcing, but in project that produce results. This is what helped us commit, and this is what created. This is our playbook, and we believe it has a case for national replication. This is when investors commit, and the impact multiplies. What started as a renewable project in a small city, it went to the entire province. A plastic circularity program which started in a small area has actually gone to the entire city. There have been many companies who have been talking about regenerative agriculture. So we really need to be really going into these kind of practices, so we don't have to actually use a lot more fertilizer, because the land is a lot more fertile if we go into a regenerative agriculture. For Pakistan, climate initiatives by channeling much needed investment into renewables, waste management, and sustainable agriculture. It takes significant capital management. The lesson is very clear. If we can prove a business model that works, whether it's renewable energy or a plastic circular program, then the private sector will invest. But to achieve this at scale, we need that blend of government incentives, multilateral support, and private capital. When everyone contributes, no single entity bears the risk. And I think so that's the way forward. And that's what the conversation has been over the last 2 hours for private sector acceleration. And so as public sector acceleration, this can be unlocked with blended finance, where grants alone, dollarized loans alone, and private sector alone fails. Blended financing can serve as a catalyst by de-risking capital with public and philanthropic funds. I'm not a climate expert, as I said in the very beginning. I'm a very common Pakistani. I'm a businessman here. And you have heard experts, you have heard the head of states here as well. And I can offer the blueprint that gave us the results. This is the essence that sustainability really means to us. It's not about the short-term fixes or token gestures. It's about compelling commercial cases, working with the multilaterals, working with the DFIs, working with the public sector, blending that finance, reducing the risk, and actually going for scalable projects. Towards the end, I would like to thank Dawn Group and all the organizers for holding such a exciting and enriching dialogue between public, private, and also the DFIs. I'm sure that from here onward, it's the time to take action. And the biblical floods we all experienced back in 2022, we don't end up experiencing once again. Thank you, and thank you, everyone.
Excellent. Thank you, Amir. What a wonderful way to finish this 2-hour session. I would request you started it, you sum it up, and I'll say a few words in the end, and then we were going to do question and answer, but I think there is so much of rich information that I have on my plate from 2 sessions that I need to sit down, and I will send you the Ministry of Planning the questions. But at the moment, if you can just sum up, and I'll also say a few words at the end.
Thank you, Munir Sahab. This has been absolutely an extraordinary discussion from eminent panelists. One of the sort of advantages, or maybe the charm of a conference of this sort, is that it brings together very diverse set of actors, people, perspectives, people who may not be otherwise speaking with each other, but through sort of convening in this manner, the conference has a life of its own, in the sense that it generates ideas through cross-pollination, and each of us have been affected more than we would know. But it is also, in another way, I think quite interesting that one gets to sort of see things that one would otherwise not know, as they are sort of voices and work that is happening and not otherwise known in a particular field, in this case, climate change. And for me personally, it's great to see the level. I mean, I've read in the papers, I've read CSR, I've looked at CSR programs, but to see the level of consciousness that exists in the corporate leaders, granted, I will say that they are not fully representative and there's a lot more to the business community, but still, to see the level of consciousness that exists and the work that is being done already is certainly very heartening. And here I would just sort of pause to give a comment that is more of a personal comment from someone who lived abroad as a part of the diaspora 15 years and has chosen to come back to Pakistan. And I feel this cognitive dissonance often. On the one hand, a lot of negativity and what I would sort of even call a sort of a political despondency about what is possible in Pakistan. And on the other hand, something like this, certainly, which I think is the antithesis of that. It shows certainly that not what is possible, but what is indeed happening at the moment on the ground. And to me, that's certainly very, very optimistic. So with that, I just want to sort of bring together 2 or 3 themes very quickly in a minute, and then I will conclude. The first, I think, was mentioned by a number of speakers. Aasim, Wajid sort of mentioned it interestingly as being a cog in a wheel. I found that interesting in the sense that you cannot be held solely accountable, is what he said. And no actor can, perhaps, because this problem is so complex. Zeeshan, Sheikh also mentioned that the development partners can really only play a catalytic role, and then it's up to the others to step up, and Amir Paracha Sahab was also sort of reiterating that just now. So this collective action problem, the government certainly has a very, very important role to play, but it's really a joint enterprise, and I think maybe that's where some of the failure is happening, that folks are not talking to each other enough, and there's not enough of a coordinating mechanism. There's a divide between the sort of the federal and the provincial level and the sort of coordinating mechanisms there, but also between sort of horizontal actors, I think is a very important theme that I sort of was able to distill. Another theme related, as Zeeshan mentioned this, is the issue of capacity. Again, this is a very complex problem. I've said this before also, climate change, and you need experts. And we've sort of witnessed an exodus from Pakistan of skilled people, and perhaps there's something we need to address there, in terms of capacity, financial, legal, regulatory, and otherwise, to be able to do this sort of work. Third, the high-quality, investable, bankable pipeline. Kate Wilson mentioned this in the work that DAI has done with respect to the CFI initiative and so on. I know some of that work. It's been really pioneering work in Pakistan, but at the same time, what was mentioned in terms of the PPP pipeline, because that's where some of the very large projects will reside I think a lot more needs to be done here because there is an upstream failure. And that work again is tough because you'll have 1,000 projects that you think could be viable, but you need to isolate maybe 10 that work, and that is very cognitively taxing and highly sophisticated work. Otherwise, you'll end up wasting money on projects that otherwise will fail later. So there's a lot of work that needs to be done, and on part of the government, we have started to engage with international experts and local expertise also, hiring, there's a program to engage international consulting firms to come in and sort of catalyze sort of that intellectual work that needs to be done to move those things. But it's been a great panel, and thank you so much to all the panelists for their insights.